Welcome to Buy, Hold, Sell. My name's Matthew Kidman, and today we have Ben McGarry from Totus and Chris Stott from Wilson Asset Management, and we're talking about the mid-cap sector and those companies that are growing. One company, Chris, BLACKMORES. Everyone needs vitamins, but at the moment the share price is going the wrong way. Buy, hold or sell?
Sell, Matthew. There's too much inventory in the channels out in Australia, and we've seen a slowdown in sales through the grey market into China, so sell.
So everyone loves the pill pop over their life somewhere, whether you're old or young. BLACKMORES, buy, hold or sell?
We think it's a hold. Stock's 30% off its highs. Short interest has been creeping up, which might create some buying pressure there. No strong view from us.
Okay. Mantra, obviously a fantastic story the last couple of years, but the last 6 or so months the share price has been on the wane. Buy, hold or sell?
We think that's a hold too. The stock was very expensive as people were trying to buy the inbound tourism thematic. That's come back to a more reasonable level, but we don't like the fact that the CFO recently left. They over-raised for the recent acquisition in Hawaii, and that's two red flags, so it's a hold for us.
Airbnb seems like a dark cloud on the horizon for the likes of Mantra and accommodation. Buy, hold or sell, Chris?
Sell, Matthew. They've lost not only the CFO but other key individuals within the business in the last 6 months. It's expensive. On a PE of 17, these MLR models trade in and out of favour throughout the cycle. So it's expensive. The CFO resigning weeks out before the end of the result date is a concern to us, and sell.
Resources are a bit back in favour of recently. Ben, nickel, gold, independence group, buy, hold or sell?
Sell, Matthew. We're cautious on resources generally. Nickel is oversupplied. Capital markets are open, so we're not seeing the supply rationalisation that we'd like to see to get that market back into balance. Stocks had a good run of late with the strong gold price and some supply interruptions or potential interruptions in the Philippines. But we think it's overdone, expensive, and potentially might need a little bit of money before the cash flows from Nova come in 2017.
There's been a bit of a denial rally. No one wants to buy any resources. Independent group's another one that's popped up. Buy, hold or sell, Chris?
Sell, Matthew. The probability of a global recession has gone up significantly post the Brexit for 2017, and if that's the case, you don't want to be invested in resource companies. If you want to play gold, we think there's better places to be, so sell.
Okay, this is your chance. Mid-cap growth story. Give us your best one.
Buy, Credit Corp, PE of 12, growing at more than 20%, we think, next year. The competitors are struggling domestically in Australia. They've made a lot of purchases of debt agreements, particularly in the last 6 months. So there's a lot of their FY17 earnings are already locked in our opinion. So it's a buy for us.
Ben, you got something that can match that or better it?
We really like MCMILLAN SHAKESPEARE in the mid-cap space. Similar PE, but it's been a double-digit grower over time. A high-return business where regulatory risk has recently been reduced. Both sides of politics have come out and said that they support the current framework. Recent acquisitions are going well, and we just don't think there's anything like it for the price in the market.
So the mid-caps have been one of the superstars of the Australian share market over the last 12 months, but it seems like it's getting a lot harder down that end of the market.